today on the Tearsheet podcast.
I'm shopping and I'm otherwise traditionally comparing prices. And if I'm more value conscious, that is how I shop. And that, I think, sort of concept of being able to find comparable products, compare them, and shop for them and make a choice, I think has translated to financial services as well. In some sense, exacerbated by the move to the digital world, where now I can fairly easily, without having to walk into a branch, sort of do that comparison and then make a choice. So in that sense, I think consumers have been trained to expect that from their financial services providers. And I think they need to then reflect it in the way they put their offerings and their pricing forward.
Welcome to the Tearsheet podcast. I'm Zack Miller. Before COVID-19 hit, we spent a lot of time talking about the competitive environment for bank deposits. Every week, an incumbent or new challenger bank was making high-rate offers in order to attract new customers. This dynamic may be different now, but financial institutions are getting increasingly savvy about their pricing strategies. Borrowing from retail, we're moving away from one price fits all into a more data-driven and competitive market. Joining us on the podcast today is Nomis Prashant Balepur. We talk about the firm's new product, a lightweight tool which provides banks and credit unions real-time pricing intelligence around mortgages and deposits. Prashant describes how many FIs make pricing decisions today and what type of data science it takes to optimize products across sectors, geographies, and customers. Prashant Balepur is my guest today on the Tearsheet podcast.
Hi, my name is Prashant Balepur. I lead product and marketing at Nomis.
And for those not familiar with Nomis, would you like to kind of give the elevator pitch?
Sure. Nomis. So Nomis happens to be the Greek word for coin. Mm-hmm. And Nomis was founded on a simple kind of premise, which is that banking and financial services still viewed pricing as a cost plus activity. So you're familiar with how lots of industries price. You think of how much something costs to make, and in banking, certainly on the lending side, cost is usually the risk that the bank takes on. And then you add something to it. That is your margin, that's your profit, and you price to that. When Bob Phillips, our founder, sort of looked at this problem, and he had done this in a number of other industries, he quickly came to the conclusion that banking and financial services was also a consumer-facing product, right? You are ultimately selling a valuable good and a valuable service to your consumers. There could be borrowers who want to borrow money from you. There could be depositors who want to put money into the bank. And when you have that, when you have that in a competitive dynamic, it's ultimately a consumer good. And when you have a consumer good, you need to think of this from a consumer's perspective. So it is no longer a cost plus problem. It is a value-based pricing problem. And that is kind of the genesis of Nomis. So sort of rethinking pricing, which is at the core of that value exchange that takes place, from kind of what were traditionally cost plus strategies to value-based strategies.
The parallel with consumer goods is interesting. Do you think sort of the level of competition within consumer goods has influenced the way banks are pricing their products? Do you think there's a direct influence?
I think there is a direct influence from a consumer standpoint, right? Mm-hmm. Because I'm, and especially now when we're in the COVID sort of era, right? We can't walk out to a grocery store; it's all happening online. We are no longer worried about price right now. We are primarily worried about availability. But I'm shopping and I'm otherwise traditionally comparing prices. And if I'm more value conscious, that is how I shop. And that, I think, sort of concept of being able to find comparable products, compare them, and shop for them and make a choice, I think has translated to financial services as well. In some sense, exacerbated by the move to the digital world, where now I can fairly easily, without having to walk into a branch, sort of do that comparison and then make a choice. So in that sense, I think consumers have been trained to expect that from their financial services providers. And I think they need to then reflect it in the way they put their offerings and their pricing forward.
So where are we, I guess, in the rollout of that on the banking side? Like how how mature,
Yeah.
are banks in terms of competing or being strategic about pricing?
I think it's so different markets and different sort of segments seem to be at varying points of maturity. But uh, if you think of the deposit side of the house, so sort of broadly speaking, uh, right, you banks take in dollars from consumers, deposits, savings and deposits, if you may, and they lend it out. And on the deposit side of the house, the concept of using data and analytics to think both strategically but then tactically about pricing has become quite fundamental. On the lending side as well, essentially thinking about not just risk, but thinking about competition, thinking about the value exchange that is taking place, a consumer's willingness to pay has also become sort of dominant. So I think strategically, the concept is widely adopted now. Does everyone actually execute on that adoption? That's a mixed bag, right? There are some who are very far along, and others taking their first sort of baby steps.
And what differentiates those types of institutions? Why would one institution be further along the adoption curve and another not?
Right. So I think a couple of factors seem to come into play because we work across a number of different geographies. And we are in Asia Pac. We are obviously in the US. That's where we're headquartered. We work with all of the five major banks in Canada. We have European customers as well. So on that spectrum, some of it is sort of just the market dynamics, where if you take small concentrated markets like Canada, we see sort of rapid adoption once a couple of the banks or lenders start to adopt a certain way of doing things, in this case, sort of data-driven pricing. So we do see that sort of some market forces at play. In other cases, it is sort of the prevalent practices that may be available or that are present in the market. And the third might just be the maturity of the systems and technologies and the effort that a bank may need to put in. So we see a few different factors at play that might influence adoption. We see some markets a little further along than others. The US, as an example, there is a broad spectrum. Some very mature, others literally just getting and taking their first steps in.
So when Nomis goes into a prospective new client, is there a lot of education that accompanies that?
There used to be. I think we've come a long way, not just for Nomis, but I think for the industry as a whole. So now it's gone from nobody really asks us whether they should do it or why they should do it. I think we go straight into the how and the best way to approach it and how to get the most value fastest or minimize risk and so forth. So I think the educational piece, the evangelism that we did for a number of years when we started off has certainly sort of shifted as the market has started to acclimatize and adopt the approach.
So can you take us through just a phantom deployment? Like how do you answer the how?
Yeah.
I'm a bank. We just signed up. Who are you selling
Right.
to, by the way? And what happens next?
Yeah. So pricing is still, again, this speaks to maturity a little bit. So pricing in some cases is owned by a function, but in most cases it is rolled into the head of a product line. So I might be the head of mortgages, I might be the head of savings and deposits. And for smaller institutions, you might be the CFO, or in fact, someone in the CX sort of suite that is making the decision. So I bought it, and there are typically a couple of different phases that the process, the deployment runs through. But before we get into that, I think it depends on the end of the problem that you're tackling. There are some banks where it is critical to get the pricing analytical decision making right. That is the back end or the back office sort of portion of the puzzle. In some other institutions, it is critical to get the front end or the frontline problem right, and to address that right off the bat. And that is true for many markets where there's a lot of negotiation or discretion that happens when you walk into a branch to take out a loan. So depending on which end of the problem you're tackling first, we basically walk in, we do a quick sort of assessment of where the key pain points are. And then based on which end of the problem we start the deployment from, and our platform sort of covers that spectrum end to end, from the back office of decision making all the way to the frontline presentment. And based on where we are starting, there are a couple of different approaches. But if it's the back office, for instance, you would start with a quick assessment of data and sort of sourcing that information, moving into an analytical exercise, and then a rollout to their core product and pricing teams. If it's the frontline, we work with them to understand sort of pricing policies and roll that out to our frontline capability and frontline product. And that there's a change management and training exercise that goes through that we take their frontline bankers, for instance, through.
Interesting. And do you see some of your clients start maybe back office and then migrate towards the front once they get comfortable with that? Is there sort of an evolution there? Yeah.
Absolutely. Yeah. So in fact, we started off in the back office. Our pedigree, again, given our founder's background, was very much and continues to be rooted in that data science, that deep understanding of consumer behavior, and using that to applying that to pricing. So that's where we have traditionally started, and that's where I think most of our deployments start, and then they will migrate to what we call execution and then eventually presentment. We have had more recently cases where the urgency was all about managing that frontline and inculcating that behavior change in what we call the last mile exchange, meaning you could have the best science and best optimization in the back end, but if you haven't sort of changed salesperson behavior in how they then communicate it to or have that dialogue about product and pricing with their consumers, none of that value flows through. So more recently, interestingly, we've been starting in the front line. They've been putting that in place, and then talking about the science and the optimization sort of that is under the hood.
And how's Nomis price? Like, what's the pricing model?
Yeah, so we are cloud-based SaaS. So the entire platform, there are a series of modules. It's a subscription service. It's typically anywhere from a 3 to 5 year subscription. So our traditional products, and we'll touch on kind of some of the new things that we've just launched, but our traditional products are, you could think of them as enterprise SaaS. So, hundreds of thousands of dollars as a subscription sort of price point annually over a 3 to 5 year term. And the newer offerings are quite different, because the other thing that we have realized is we are pushing to accelerate kind of time to value and time to market with our customers, and in some sense also democratize the adoption of pricing. So we are taking these concepts, packaging them up, and rolling out, and have rolled out very recently products and modules on the platform that are at a much easier to absorb and easier to adopt sort of price point. But traditionally 3 to 5 year sort of subscriptions with kind of annual pace.
Got it. So I think it's a great time to talk about those new products. I know you're excited about those. So can you describe what they are?
Yeah. So we just launched a product called Insight. That's a small N for Nomis, and like Insight, but spelled a little differently. And the core idea was to sort of to arm our customers, arm the market with intelligence, and intelligence about how the markets are operating, and intelligence about customers themselves, without taking on any of the heavy lifting around data, around analytics, around systems integration. So the goal was how to equip kind of our customers and our markets with intelligence that they could make good decisions on without taking on a large sort of complex exercise, which most pricing deployments tend to be. So we have just launched in beta. It's initially available for the US market, and it's for two of the sort of pillar product lines that a bank has, A, deposits, and B, mortgages. And they solve sort of some fairly acute kind of needs. So on the mortgage side, the standard used to be that information that I would get to do mortgage pricing was on a 36-hour cycle. And as you might imagine, with the volatility and the craziness, that is just sort of too long. And we have now shrunk that down to literally real-time updates and information happening every 10 minutes. So, you're not quite in real-time trading land, but for mortgage pricing professionals, this has been an absolute sort of game changer, right? We have a cohort of early adopter customers who are absolutely sort of loving the product that's in market now. So a huge shift in the pace and the level and the granularity of information that is accessible to them. On the deposit side, a similar shift, not in terms of speed and pace as much as granularity. So traditionally in the US, most banks do price their deposits by region, but the most granular they might get is at a state level. So 50 states. We have basically sort of turned that upside down by starting at a customer and a consumer level, by understanding fundamentally what they care about, and then bubbling that up to say, not 50 states, how do you understand granular differences at a geo level, at a zip 3 level? So there are 929 zip 3s in the US. There are 41,000 zip 5s. That is a 20x at a minimum expansion of granularity. And what that allows our customers to do is to look at the problem with a little more precision. So instead of taking a big kind of hatchet to the problem, they're now starting to get a lot more surgical again. Lots of great traction and excitement, and even with the first batch of customers who we have onboarded, and lots more to come.
That's great, and congrats on the product launch. Can you give us on the deposit side maybe some of the use cases for that some of your this beta cohort is
yeah. So just I think a couple of things that are starting to stand out. The first is this basic notion. So if you think of the environment we're in, right, in the US, as in many markets, the central banks have cut their rates down to nearly zero, where the Fed funds rate is sitting at 25 basis points. So rate by itself is really not going to move the needle a whole lot, right? And the reaction that banks have had to that, understandably, is that they're all starting to lower their rates. And the question that they're asking themselves is, should I do one fell swoop of a cleanup across my entire book? Or can I be more surgical? Because if I do the former, then my what's called the net interest margin, my spread literally kind of evaporates. Whereas if I take a more surgical approach, and if I understand where I can sort of lower it and by how much, and do that more methodically, then I can sort of preserve that margin and redeploy it for other things, and whether that is lending out to small business lenders or what have you, and that's a core use case. So our customers are taking this information and saying, I'm not going to just make this blanket change across my entire book of business. I'm going to surgically look at areas of risk and opportunity, and I'm going to manage that. I think that's one key use case. The other thing that everyone is worried about and thinking through is just the impact, right, of all of the macroeconomic sort of conditions that are emerging. And prediction and forecasting in this environment is very, very hard. But part of the value prop for Insight is not just its granularity, but because we have taken a bottom-up consumer level view, we now can help banks better assess where macroeconomic stressors will have a strong impact versus a weaker impact. And that helps them again to forecast and rebalance that portfolio. So sort of the two big use cases are getting more surgical with pricing, so that they can redeploy effectively, salvage that capital and redeploy it elsewhere. And then two, getting a better handle on just kind of where they will end the year. It's not a forecasting tool by any means, but it has enough of the macro and micro factors sort of built in that they can take their footprint and do a very realistic assessment of where they're likely to land.
That makes a lot of sense. So I guess we have time for one last question. I want to look a little bit out into the future. So you just launched this new product.
Yeah.
Obviously, hearing you describe it, it makes a lot of sense to me to understand how that fits into the existing products as well. Where are you taking the product over time, like over the next 12 months? What are your biggest priorities in terms of pipeline or focus?
Right. Yeah. So I think kind of three things. The first is what we just described, right? Which is how do we democratize adoption? So pricing and pricing technology has typically been the purview of the large banks, and we want to make it easier for everyone to adopt it without kind of investment and total cost of ownership being a key hurdle. So there's a big focus on how do we simplify it? How do we make it easier to adopt? And Insight is kind of a first step into that. The second is a theme we have actually had for years now. It's not a sort of new strategy, but something that we will continue to pursue, which is we believe that pricing, again, ultimately is that value exchange, right, between the bank, the lender, and the customer. So making pricing customer-centric and holistic in that sense is critical and crucial. There are lots of things from a product perspective that are going on around it, and it will come down to things like how do I present and execute offers that may not just be about rates or pricing in a traditional sense, right? It could be rewards, it could be other types of incentives that I'm providing my consumers, and banks need a lot of help in that area, and the platform will continue to sort of push in that direction. And the third is just the natural kind of shift to digital. And as that happens, we have a number of customers who are sort of asking us to sort of support them in that endeavor, right? And that's a bit of a technology, there's a technology angle to it, meaning how do you then increasingly enable the consumption of pricing and the right offers to be delivered in any channel, right, in any format. And there are a number of things that we're doing from a platform perspective that sort of gives our customers and the market that agility and that flexibility. So sort of those are the three things: sort of democratize it, right, make it accessible to everyone, get down to the sort of present pricing holistically to a customer. It's not just about rate. Think about all of the incentives, and then make it ubiquitous for them to deliver regardless of the channel.
Prashant, thank you very much for joining us on the Tearsheet podcast today.
Awesome. Zach, this is fun. Thank you.